The setup here. If you can see our faces in the lower left-hand corner of this screen, say hi to Tyson myself. Give me a quick wire yes in the chat if you can see us and hear us. Let me do a quick AV test. We are live, ready to rock and roll. If you're out there, let us know. So Mondays, 1 o'clock, AAA session, Asking Analyst. We're talking about stocks and Forex. We've got some symbols we want to take a look at today. Tyson and I are super excited. This week, today actually, we just finished up one of our live sessions for our brand new Equities on Demand. And Tyson, what do you think? We got some excited students out there? Because I think we do.
They should be. I'll tell you what. I know it's kind of like drinking from a fire hose, as we always say. But the value that we're bringing and the thing I love about it, Chris, is it allows you and I to set aside dedicated time every day to trade
Yes.
together.
Yes.
And the idea is like, hey, let's I've always had this like desire to generate like daily income, but it's easy to get busy and like not find the time. But we've decided, I think kind of selfishly, we said, listen, let's actually set aside an hour, hour and a half, 2 hours every single day and day trade and generate some income. And we've got a group of students doing it with us. But it's not just about day trading; it's also about swing trading. It's about learning and understanding options and income strategies and earnings plays. In fact, maybe in a little bit here, we can look at Blackstone. I want to kind of do a
Mm-hmm.
little bit of technicals, and I want to throw a curveball at everybody on that one. But yeah, I'm excited. I hope everybody can tell that I'm excited. I think that we've set the bar very high, and there's no doubt in my mind we're gonna exceed that bar, Chris.
I know. And with that little VIP session we ran last week, I wanted to make sure everyone knows that, Tyson, this is probably as excited as I've seen you, dude.
Which is I'm easily
And you're
excited
easily
too.
you're
So that's
easily excitable, but it's like this is about as
yeah.
excited and as passionate as I've seen you. So I'm super happy with that. It's awesome. It's like Tyson unleashed, and his knowledge and the beautiful mind of Tyson can be unleashed on the world.
Yeah. Yeah.
So
Well, it's going to be fun, and
yep,
anybody who's with us, listen, you're not going to learn it all overnight. That's why you're going to be with us every day, which is awesome. So
absolutely.
it's kind of like this. If you like these Ask the Analyst sessions,
Yep,
where we get pretty deep, we go even deeper in those. We go through charts, we go through live trades, and all
live
that kind of stuff,
trades.
and we do it every day.
Yep.
So
So
it's good
I mean
stuff.
that's where we start. I mean, really, it's interesting because what about a year plus ago we started this Ask an Analyst session. And the
Yep.
more and more you and I were collaborating on AAA for these 30-minute sessions, 1 hour sessions, it's like we should do this every day. We have a lot of
Yeah.
fun doing this. This is like this allows us to kind of open up, the freedom to talk about whatever we want, the freedom to trade whatever we want. Like all that's great. So that's how the genesis of Equities on Demand began, and here we are, ready to officially launch it. And I know all the traders are excited about it. And today again, kickoff session number one, and it's going to be a great week. So we've got
The reason
traders.
I love it too is because it. I've been trading stocks and options longer than I've been trading forex.
Hmm.
I've made more money collectively, multiple times more money collectively trading stocks and options than I have in currency. And I'm a good currency trader, but I felt a little bit boxed in. I want to thank the company, Market Traders Institute, because I felt a little boxed in, over the last few years of like, okay, we're a forex company, and if I take a trade that on an options, we had a couple options placed last week, that made 33% in a day. Like
Yeah, yeah.
you can't do that in currencies. And I felt like, well, I guess I can't really talk about that because it's not forex, and so I love that we have the ability to talk about it. One of our students said that it's almost like Tyson's been unbridled or whatever she said, been let out of the pen and free to reign and free to run, which is
Yep, free range
good.
Tyson, free range Tyson now.
Yeah,
You can find him at a supermarket near you
yeah.
in the organic section.
Tyson chicken.
Okay, so Bilbo's asking a question. Forex talk, just stocks. Well, today in AAA, we're going to talk about a little bit of everything. So we've got, about 25 more minutes. Let's talk about some setups this week, Tyson. We had some. Actually, so I did on my YouTube session this morning. I did a weekly outlook, and I was looking at pre-market. I saw that the SPY was gapping higher, the Dow Jones was gapping higher, the Nasdaq, everything was looking to gap higher, and it did. And you can see that we're up, well. I think right now we're over 1%, I think, on most of the indices. U.S. market 1.26% on the Dow, 1.48 on the SPY, and 1.49 on the Nasdaq. So everything is going to the upside. We expected this, and you can see that today's futures pricing was really catapulted off of a holiday, right? We had a shortened week last week with Friday's Good Friday holiday. Everything was closed. Wall Street was closed, but yet the U.S. decided to come out with a job report, and they did. And I wouldn't necessarily say shattered expectations, but we did see a pretty good move as far as what the market's interpreting as good news. So I'll go to last week's news. And again, Wall Street was closed last week, bank holidays, but Forex was still open, cryptos were still open. This was the expected move, 652 on the forecasted side, 652,000 jobs from the month of March, and we came in at 916. So it was way above expectations, which is great. We had a positive revision in jobs. We had a positive revision in average hourly earnings, although we did miss the average earning mark. We forecasted 0.1%, came in negative 0.1, but I think that again, the overshadowing was we had a positive revision in both average earnings and in jobs. We shattered the number and we met expectations with unemployment. So that was, I'd say, interpreted positively. Risk appetite for the markets. We saw that, probably some desperate stock traders looking to get something and get some action today. So what they do, boom, they're buying pre-market, and the movement was bullish on the day, and that's what we're seeing right now with all the major indices. So the SPY is higher, the DIA is higher, the Qs are higher. Tyson, let me ask you a question. We're in April right now. It's April 5th. We've got the first, Q2 underway. Do you think that April is going to be a risk on type month? And if so, what does it look like in stocks for you? What's it look like in Forex? What do you think?
Yeah, I think you always hear these analysts talk about in terms of like innings, like what inning are we in? And it seemed like I don't know if you I don't know if you if you feel this way, but it seemed like after the 2008 2009 collapse, it seemed like we were like in inning 3 or 4 for like years and years and years and years.
Yeah.
Um, I think we're in inning 8. Uh,
Of the bull run?
yeah, and
Yeah.
I think that, but the inning 8 and 9 can be long, and they can be the most euphoric innings. And
Mm-hmm.
so, um, it because think about this: not only are there more people with jobs equate to income, so there's more people having income, but also more people are getting free money in. It's not free money, by the way. Let's just be clear on that.
Right.
But money in their mailboxes and in their bank accounts if they meet the requirements from the stimulus. And so jobs are coming back. They're doing well. Stimulus money. Now, where is that showing up? It's showing up in asset prices. It's showing up. We've got a house down the road. My house was worth probably 370 a year ago. We have a house that's like way smaller than ours. We have a 3-car garage. They have a 2-car garage, and don't have a finished basement. They're putting their house up for like 430,000. That means like our house would be like has gone up like $120,000 probably in the last year. That's nuts. That's
Yeah.
crazy.
Yeah.
We're seeing this. So my point is it's starting to, come into inflation a little bit. And that's
Yep.
the next phase is going to be inflation. It's going to be inflation at all asset classes. We're going to start to feel it more at the pump like we are. We're going to start to feel it more at the grocery store. And eventually the consumer will get squeezed to a point where it's like, oh, this is unsustainable. It feels good in my stock portfolio, but I can't afford even to live. That's when we'll have that fall. But we've got some more innings to go. And here's the deal. I think the inning 1 through 7 took years. So how long could inning 8 and 9 take? I mean, I think that it could take anywhere from 3 months to I think we have another 2 to 3 months maybe in this rally to a year or two.
Yeah.
I think we're getting closer to that next. What I mean by that next kind of leg down is I'm talking a sustained bear market where we go through a bear market. We don't just have a
There's no
1
V
week bear
bottom.
market and then it
Yeah. Yeah.
snapbacks.
Yeah.
Yeah,
There's
where
it's
we have
not.
a bear market where we sell off 20% or more.
Mm-hmm. And we
Maybe
stay
don't
there.
stop there. Maybe we get on 30, 35, or
Yep.
40%, and we form a base, form a floor,
Yep.
go up, come back down, retest those. And over the course of a month or 2 or 3 or 4,
Mm-hmm.
we bump along. And then it takes another year or 2 to get back up to the highs. A
Correct.
bear market is not we crash down 25%
A
and 2
month
months later
later.
we're back above the
I know.
highs. That's
I know.
no, that's just a
I know.
that's like somebody had a minor heart attack. They went and got a stent put in, and now they're
Yeah.
basically healthy again. So
Yeah,
that's not.
defibrillated the market last year with the Fed. Essentially everyone went
Yes.
to emergency cuts. We jacked the market up and engineered our way out of a crisis. So
Yeah.
that's a perfect point. And just on the subject of you're talking about, I know you and I have kind of a similar housing situation. We're in the process of selling our house and looking at a new
Yep.
one. I just read an article this past weekend that I think average prices across the board are like 15 to 60% nationwide up. Average gas
Crazy.
prices at 288, looking to creep up towards $3. There's an article I read. It was through Apple News or whatever. Um, House was, I think they listed the house, and within like 10 days they had like 80 offers, and it was like I think over half of them were cash offers. Some of them were sight unseen. It's just like the inventory is so low. The markets are, it's crazy. It's a great opportunity to be a seller, but you also have to remember, so where do you go from here? Like if you're selling at the high, you're also buying it at the high. If you're selling, I know what my house is worth. I know what I think is a fair market value. I think that we will make some money on our house, but at the end of the day, it's like I just know that we're only, if I was to stay in this house for another 1 to 2 years, I would not want to move because it'd be way too expensive.
That,
You
that's
know?
that's the situation we're in. So we're
Yeah.
like, oh, should we build? Because so, and not to get on real estate, but this is
Hmm.
actually part of investing and stuff. But it's like, do we sell? But wait a minute, we're selling at the top to buy at the top.
Right.
However, the other thing that I'm kind of going through is, well, if I buy at the top of something that has potential for more appreciation, then that's good. You see what
Right.
I'm saying?
Right. Right. Right.
So I'm in a great area, but has my house maybe peaked, whereas another area is still at the top also, but has the expectation of maybe more upside potential.
Right.
But it's crazy. So here's the deal. I love what we're going through right now. It feels good. This is we're making some money. The market's going up. Everything should feel good. I don't want to be a big bear,
Hmm.
but here's the deal. Like this is all awesome if we can grow our way out of this.
Right.
If incomes can actually, if we go back to a normal, let's say we go down to 5.5% unemployment rate, even at a 6%, that's fine. If incomes can start to pace higher and keep up with inflation, then all of this big rally and all of that, this is real.
Yeah.
However,
Tyson,
if
look at on
incomes
the chart.
can't,
Look at on the chart. Remember this?
exactly,
Yeah.
yeah,
Tell everybody about it. What do we got? That's our
we've got
fancy acronym.
jobs, we've
Yeah.
got income, we've got consumption. So you need jobs first, then jobs create income, and income creates consumption, and consumption creates growth. Once we get so growth and more consumption, growth, companies have to, you know what, I'm a bread maker. I had to make 10 loaves of bread yesterday because I only had 10 customers. Today I have 1,000. Wow, I need more. I need to grow my business,
Hmm.
grow our business, and we become more efficient and we earn more money. And then if we earn more money, I get to pay more dividends. And that's the way that the markets typically work. And that's great. That's great if the markets work that way. Right now, we have to work. Right now, we're starting to have some jobs. Jobs numbers look good. Great. I'll give credit to Trump. I'll give credit to Biden. I'll give credit to the admin. Great. Cool. We managed our way out of this pretty good. All right, our incomes, we've got to have that income follow, because right now the reason, so why are asset prices going up if incomes really haven't been supported it?
Hmm.
Because of social programs,
Yep.
which, okay, that's fine to get us out of the problem, but we can't depend on that. That's unsustainable forever, right? So the next phase that needs to fall for these prices to maintain, for us to go up, for the S&P, for the Dow to go to 50,000, for the S&P to continue to grow, we have to see incomes grow, and then that will follow with real consumption. Right now, I think we have artificial consumption happening, and I'm not convinced that the real economy can actually support the consumption that we've seen. In a couple months, we'll know whether that's real or not. But I'd like to see the jobs number come in good with income growth.
Yeah.
Then I'd be a much bigger bull. However, I can't be a bear because there's so much money out there sitting on the sidelines needed to get put to work. So I think for the next few months, I want to be a bull.
Hmm. Yeah. And I got these all right, right? So we got
You did.
consumption, we
Yep.
got growth, earnings, dividends. Yeah. So basically, that acronym, we need to see real data to support the path that we're on. I mean, you have to remember, if you look at the SPY, and this is a daily chart, this is what last year did, right? I'll drag this over here so everyone can see it. Um, you're looking at, COVID crash, which was kind of a lot of things tied up into a bow tie of COVID. Oh my gosh, nobody's ready for it, and it created panic. Well, there was a lot of things that needed to happen in the first place. I mean, I know, Tyson, if COVID never happened, you and I would have still been bearish on the stock market in 2020 to start the year out. So the fact of the matter is, the fuel and the catalyst was COVID. But like Tyson just said, you can't have a bear market where you go 20% to the downside and then within a month you buy your way out of it, you engineer your way out of it, and off we go into new, ridiculous, almost one would say unsustainable highs. But like Tyson's talking about, the eighth and ninth inning, they can go into euphoria, they can go into crazy, crazy, ridiculous extremes. And I know, Tyson, you said this many times. The highs are usually formed from blow off tops, not from these little dips and rallies, dips and rallies, dips and rallies, sustainably higher. Having little pullbacks are frustrating because it's like, when are we finally going to break these lows? When are we finally going to break this trend line? But instead, what's happening is the market is, pulling back a little bit. But if we start to see this low from a couple weeks ago into this type of high with no pullback, now we're starting to have this conversation again around, okay, this looks like a capitulation move. This is blown off those highs by, let's say, 5, 7, 8%. Now we can talk about, where we're at seasonality wise, when's going to be some profit taking, when we can start, really forming the top that we think technically is coming. That's all.
Yeah, and another thing that is not yet, but one thing that we're going to keep everybody, our students, everybody up to date on, especially in the equities on demand, is something that very important. I want you guys to remember this: stock buybacks. Corporations
Yep.
are really, really smart, just like you and I should be really smart in finding the cheapest form of capital to be able to put to work. Lately, lately being the last 10, 12 years, the cheapest form of capital is to borrow from the Fed funds, to borrow from a bank, really low interest rates, and buy back your shares because you know that you can grow your company at a larger rate. I can grow my company at 5% annually, and I'm only paying a 2% interest rate. Therefore, it's an arbitrage. It makes a lot of sense. Here's the problem. So that makes sense. Companies have been growing their companies and growing their bottom line and growing their growth based upon cheap money, which makes a lot of sense and it's awesome.
Mm-hmm.
Until that cheap money no longer exists, they're still going to they still need access to capital to fund their expenditures, to build their plants, to pay their payroll. Where do they get that money? The cheapest form of capital then goes from the Fed and from banks to shareholders. They issue more shares.
Right.
And that's going to be the next shoe that drops, is when the the funding mechanisms for the business goes from normal banks and Fed and stuff like that. When it goes from that to the funding mechanism being Main Street by companies dumping new shares on the market,
Right.
that's going to be when the shoe drops, and that's going to be kind of scary. I don't think we're going to be there until we see a 10-year yield. And I want you guys to write this down and pay attention. The 10-year bond, I believe it used to be 3%, used to be that line in the sand that I would look for. I think 3% is still, I've been saying this for 10 plus years. 3%, we get over 3%. That is that sustained. These massive wealth managers now can call up their wealthy clients and say, hey, let's get out of our risky stocks and go into bonds because now you're going to outpace inflation 3%. I think that number psychologically is now closer to 2.5. So if the 10-year yield gets above, and I'm going to say on a sustained basis being for a 3-week consecutive time, that's going to be a little bit of a cash crunch, a little bit of a situation for some of these corporations. And they're going to start to look. It's cheaper to dump a bunch of shares and issue a bunch of shares than it is to go borrow from the bank. And that's when we could see that next move down. Oh, when are we going to get there? Again, I'm convinced we're going to get there in the next at least 2 to 3 years. We could get there in the next 2 to 4 months.
Tyson, based on the pace that the TNX is running right now, man, I mean, we're at 1.72 live right now.
Yep.
I've been watching it. I mean, I was long in the dollar, long in the 10-year note since point 0.5. Like when it was down there at double bottoms, looked great for a little bit of a correction and a rally. We have not stopped from those lows, and so I think now the pressure is on. Like, do we hit 2% and calm down a little bit? Do we stall at 1.7 and fall to 1.3 or 4? One thing I'm watching almost every day in my flex room and watching it with us, and we'll watch in EOD as well. But the mortgage rates, Mortgage News
Yes.
Daily, I got this right from some of the vendors that I'm working with and servicers for mortgage. 30 years at 3.39. Literally 3 months ago, this was 2.7, 2.8. So
Yeah.
we're seeing that the 10-year note is directly affecting the 30 years, and what you're looking to do with homes, whether you're refinancing or buying, and with inventory super low, cash offers coming in, housing, real estate, all appreciated at this point. This is a really important level to watch, and that 10-year note is going to be a big one to keep an eye on. And I think that has a lot to say about what the market's future looks like. If you see the 10-year note at 2.25, 2.5, look out. I mean, we saw it at 1.6, Tyson, 1.6, and the market scared off, and we had like a 3 or 4% sell off in stocks.
And here's the reason why. A lot of people don't understand. Like, why would that even matter? The reason being, and it's so important now, because some of the main culprits that are holding up. Now, this isn't going to be the case long term. When you fast forward 5, 10, 15 years from now, the people that are going to prop up the market are those between the age of 25 and 45,
Right.
because those are the next big earners. But the biggest proppers of the market right now are the baby boomers that are taking unwarranted risks based upon
Yes.
their age profile because they have no place else to
To
go.
grow, just to go for growth, to have any type of yields and
Exactly.
returns. Yeah, there's no
So
fixed
it's two
income
places.
cash.
It's
Yeah.
corporate buybacks historically, and it's baby boomers. And so now think about this. Let's say I have $2 million and I'm a baby boomer. I'm like, I can't live. I can't really, or let's say I have $1 million to make it easy. I have a million
Mhm.
dollars. I can't put it in a 10-year. I got to make more than 12 to $17,000 a year. I can't
Right.
live off of that. However, we get up to 3%. Now my financial advisor says, hey, you know what? You've done really well in your stocks. I think we can cut your expenses, and you guys, you and your wife, you guys can live off of $2,000-3,000 a month, and you're in this income with risk, fairly risk free and bonds. At that point, I could say, you know what? At least I'm not losing money because I'm outpacing forecasted inflation.
Yep.
You know what? Let's do it.
Yep.
That's the number. That's the reason why this is so important, is because that there's going to be a certain psychological number where all of these baby boomers that have been taking risks bigger than they should over the course of the last few years are going to say, okay, I've done really well. Now let's de-risk. Let's accept that 2.5, 3%, and let's go. And that's when we're going to see an exodus out of stocks. And at the same time, that's when the borrowing costs are going to be higher for corporations,
Mhm.
but they're still going to need money, and they're going to get that money by issuing more shares out to the market. That's when we see the next crash.
Love it.
Again, I don't know when that's it. When that is.
Yeah.
I mean that could be heck. But maybe this whole new modern economic theories, maybe this is real, where the Fed says, listen, we're staying, we're keeping free money, cheap money
Yeah,
forever. I don't know.
MBS and interest
Maybe this
rates
is
20.
real.
Hey, I mean, they've said so. It's I mean the super dove tag team of Yellen and Powell right now, which is interesting. I think Powell became progressively more dovish as Trump like tweeted more about him.
Yep.
So now
Yep.
he's dovish and Yellen is dovish, and they're talking about not touching rates until 2023. But here we are, literally watching the 10-year note tick up every single day, not stopping. So it's just like you got to pay attention to that stuff, and that's so again we will talk about this. We'll talk about this in Ask an Analyst. We'll talk about it in Equities on Demand. These are things that could affect every possible trader, investor out there, or just people in general. This affects Main Street. This affects Wall Street. This is a big shift portfolio wise.
Big, and I hope that people are like, oh man, I was looking for the next euro dollar trade, Tyson, on the 1 minute chart, and I'm mad because you didn't show that today. Guys, what we're talking about here affects, like, it's so much more important than the 1 minute euro dollar trade that you think. Like, this
Yeah.
is like
This is
big
macro.
time,
This
like
is macro.
affect everybody
Yep.
type of stuff. So hopefully you guys like this. I think it's important for us to talk about this kind of stuff too. With that being said, Chris, I would love to show um, BlackRock.
Yeah,
I
yeah,
want to
yeah.
do a
Let's do
quick.
it.
I want to show this because I kind of want to set a little bit of a seed, maybe get some people kind of excited about some of the things we're doing.
Mm-hmm.
Um, so this BlackRock is one of the largest institutional financial, money managers, banks, money centers out there.
Yep.
They got their hands in almost everything, a lot of things, investments, private equity. Great company. It's actually a really good stock. It's a good growth financial stock. Long term, it's good stock. However, I look at this thing and I'm like, this is the definition of a stock that, Chris, I don't freaking know. I mean, is this thing going to go to
Wow.
the moon, or is this thing going to
Yeah.
fall? And like the exact price we're at right now, I don't know.
Mm-hmm.
Like I think it's going to move. I could see it blowing off this top, and I could see it coming back down to, towards that 700 level.
Right.
But do you agree that it's like, man, this one's hard to kind of forecast?
It's hard to forecast, but I'm gonna let everybody know that Tyson's got a little secret on how we can actually trade it. Because if I'm
Yeah.
not mistaken, Tyson, there's earnings on BlackRock next week, right?
There's earnings on BlackRock next week,
Yep.
and one of the plays that we're going to be looking at, and I'm not going to go through all the details
Right.
in this session, but one of the plays that we're going to be looking at is essentially it's a strategy called a butterfly. Technically, there's a couple different. You don't need to really know the names.
Yep.
Some people call it a butterfly, depending on how it's structured. It could be called a strangle or a straddle. The easiest way to call this is the straddle collecting some premium, essentially. So, but all we're looking at is we're just looking at the markets to move. So we know we have a catalyst. I wanted to show this example because technically speaking, there's a big bull case that I could make on this. The fact that we kind of breached those recent highs, and maybe this thing's going to go through that capitulation move higher, but there's a bearish case. What I don't know is I don't know if we're going to run higher and I don't know if we're going to move lower, but I do know that we have a catalyst that says we're going to move.
Right.
And I want to take a trade where, and this also helps me stress less.
Hmm.
I want to take a trade where I don't care where it goes. Chris, I don't care if the thing goes up to $850 or goes down to $500. I just want the dang thing to
To
move.
move.
And I
Exactly.
want it to move within a realistic high probability. I don't want to be unrealistic about how far I think it's going to move. I want it to move in a high, like something that maybe gives me 65, 70, 75% probability.
Hmm.
We've got ways to do that. And again, we use options to do that. But this is an example of one of those trades. And again, not to get fully, in depth with the strategy, this is one of those stocks that I like. Again, I could paint both bullish and bearish pictures. So if I only trade the stock or I only trade in one direction, then I either have to be a long-term buyer of this because it could fall, right?
Hmm.
And I have to be okay with taking some drawdowns if I buy it now, or because I don't know if it's going to rally or sell off, I've got to sit on my hands and potentially miss a huge rally.
Right.
So, and that's not, both of those options are just not attractive to me. So for me, I would rather do something and use some options, still have probability in my favor. And this is one of those trades, and I'll pull it up here. I'm going to do some quick calculations here. This is one of those trades, Chris, where we're looking to buy something. I'll just give you an example. We're looking to buy something for about $24. And we think we can, in about a matter of a week, we think we could turn that $24 into almost $33. So on a percentage basis, I mean, that's 30, 40% in a week or so. And we think we can do that by the end of next week. So it's going to be fun.
Yeah. So I mean, we're looking at that's about right, right? $11 on the $23
Yeah,
position.
about $11 on a
Yeah.
$23 position. Yep.
So we're
And
looking.
again, that's another reason why I love what we're doing is because there's not a currency in the world that's gonna. What currency out there is gonna double,
Yeah. 40. I
or
mean, that's
what
forty eight
currency out there
percent.
is gonna go up
Right.
50% the next week? There is none.
Right. Right.
But this is a trade that we're looking at that we're actually probably going to be executing tomorrow. And maybe even we could even do it today if we wanted to, but probably tomorrow where we could legitimately make 40, 50% on that trade in a matter of a week, which is
Yep.
like kind of crazy to think about it, but it's real.
It is real, and and I'll throw a little bit more spark at this. I mean, we literally did this last week on CarMax. You and I both did it, and we both made some nice money on it, and that was like 3 days.
Yep.
So I mean, it's very doable, and these are some of our like weekly plays. So let's say, Tyson, this is our little stock tease and equities on demand. If you want more information, I'll make sure in the show notes for today or the description. If you're watching this recording or if you're live, obviously if you're live, if you have the ability to contact one of your educational specialists at Market Traders, you can talk to them about equities on demand. If anybody's watching this video after the fact, inside the description, I'll put a link to a webinar that Tyson and I did last week, just to give you give you an overview of what we do in equities on demand. And again, what this is it's essentially us taking Ask an Analyst and making a full service 5 days a week sessions out of it. Like if we did Ask an Analyst every single day, 5 days a week for an hour plus a day, that's what Equities on Demand is. So we're having a lot of fun with it, and we just started officially today, and we're looking to do that for the next several years. It's like there's no reason for us to go anywhere when we're trading actively and making good profits and knowing that the strategies work. And something like this is awesome. I mean, and again, strategy wise, it doesn't matter what the price does. It just matters that what's the catalyst. We've got earnings. Typically, earnings give us historical figures of what do they move above and below, and so we take conservative measurements there and we calculate what we can trade. And so using option strategies, we can calculate whether it goes up or down. We typically have a leg of that trade very profitable, a leg of that trade not so profitable, but we close for a net win. And there are ways we can get more out of it. We can manage the trades individually, but for the most part, if we just get a catalyst, you can turn profit within 24 to 40 hour period and have some really incredible profits, which is a lot of fun.
Yeah.
Certainly a lot of fun. Okay. Anything else on stocks? I know that's just one stock. We talked about a lot
No,
of things, housing wise and
nothing else. I
JICJET
would
and
like I would like your opinion. To kind of wrap back to the mothership. What are
yes.
your thoughts on the Aussie dollar? I'm on record. I think we're hitting 75 before we breach those recent highs. I'm kind of hoping. I know the market doesn't give a crap what I hope, but we do have some supply up there that I think we could go and hit. And so those supply levels that were recently put in the last 2 weeks, I think it doesn't surprise me. We're rallying up a little bit. I'm expecting those supply levels to hold,
hmm
and I think we're going to push down to 75. Hopefully before we get to those levels you just marked. But
Yeah.
the one level that I do like is right at about 77.60 right there. I think if we can stay, if price comes up to that level and test it, I think we're going to see a nice sell off there.
Yeah, I think that's great, Tyson. I think this level right here, I like this pocket right there, and I like this high, just like right in here. This little cluster would be a great spot to be looking for. Again, what we could look at structure-wise is you see the price is pulling back a little bit, so we could have price doing something like this where it's retracing, 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 finding some equal highs, and we just simply look for a candlestick break, or we look for a candlestick pattern, we look for a trend line break, we look for bearish candlesticks there, we look for rejections. I mean, anything that cooperates with the bearish tendencies and confirmations, we look to take it. I would like to take this all the way back down into this high, which is around 74.50. Tyson said 7,500. That's a great level. But look, I think that even if we come back a little bit higher, I've been telling traders this for the last couple of weeks. This level here, oh, that's not very straight, right here. So this level here would be a great resistance area. This level here, this level here. I mean, I think overall it's like, just keep an eye on it. We might have some complexities where it pulls back into this area, forms some indecision, maybe scores a point right here, and then quickly comes right back down. So watch the structure. So the way that I would tie this all together, Tyson, is I would look at the dollar index. Because, even though the dollar index is weighted differently than the DXY, we have been very patient on this multi-year low. And addition to that, we had like a 6-month trend. So we have this larger trend line breaking, which I think is a great confirmation for the dollar to gain some strength. We also have a little bit of past support becoming resistance right there. And we have some previous highs and lows right there. So to me, I don't think the dollar is done yet, but this is what the market does when it moves in waves. We might see the dollar go from this low to high. It may pull back and use this as a higher low. So we have this swing here, pulls back for a higher low, goes up again, pulls back for a higher low, and then swings up into this zone where we're taking profit as a dollar bull. The other side of this is maybe we have it go from here. It sets up a flat pattern and finds some buy zones and finds some structure support, finds some interest to then take it up for another leg higher. And this becomes, let me draw this out, this becomes a larger 1, 2, 3 wave correction. And all that is against this 1, 2, 3, 4, 5 wave move to the downside. So Elliott wave structure, this makes really good sense logically, technically for a correction in the dollar. Yearly pivot wise, target wise, structure wise, we've got just awesome levels to trade back towards. And again, I've said this all year because it's a nice yearly target, 12,090. I think that's a level that the dollar can hit, 12,090. And until that's hit, my case for dollar strength continues. And it might be slow and it might take the next month or 2 or 3, but I think that the dollar is going to find a way to hit that. I really do. So Aussie dollar is, I mean, it's I believe dollar index, like I'm showing on the chart, it's about 25% correlated with Aussie dollar and the euro dollar and pound dollar and other ones. It's a pretty evenly distributed basket. So we've seen some interesting trades because dollar index looks great, Aussie dollar looks great, but then we turn over to like dollar CAD. Even though I love this trade, dollar CAD is like not yet proven that we're going to break these trend lines yet. So dollar CAD is still like stalling here, right? It still has some legs to kind of break the trend line. But again, I said this morning in my trading session, my little live weekly outlook. If and when we break this trend line, I am a buyer on the dollar CAD, and I'm taking this back to this low. I'm taking it back to this previous support resistance, and between 130 and 133.50, I am a dollar CAD buyer, and I'll stick with it. So there's still legs on the dollar. I think that this might be maybe a retracement week. Maybe the dollar takes a little bit of a hit. Maybe the stock market rallies this entire week and the dollar does not. Fine. But as long as, and I know Tyson, you back me up on this too, as long as the dollar CAD doesn't take out this low, as long as the Aussie dollar doesn't take out a high, as long as the dollar index doesn't take out a low, the structure really is still unchanged. And it still looks good in the way that we're analyzing it. So
you're looking for the weakness and the short term weakness in the dollar as opportunities to potentially get back in or leg into some of these trades.
yes. And so like what I look to get back in on are some of the partial profits I took earlier. I did close up profits on Aussie dollar. I did close up profits on New Zealand dollar. I did close profits up on pound dollar and euro dollar and also on dollar Swiss. And so if we see dollar weakness, then Aussie dollar is another chance to sell at a higher price. New Zealand dollar is a chance to sell at a higher price. Pound dollar is a chance to sell at a higher price. Euro dollar, I would say, Tyson, I'm not sure about you. I'm going to go ahead and say no trade. I think that the euro dollar.
I've been kind of,
yeah,
I'm the same way. The euro dollar and the dollar yen, I've just kind of been avoiding a little bit for now.
Yep, 1.4. I'm going to put here some levels. If anybody's taking some notes today, 1.40 resistance. Okay, I like that round number, and also 1.42 resistance. That's kind of a window that I'm trading. New Zealand dollar, we're talking about 7,400 to 7,500, which I don't know if we're going to come back up that high. And you said 7,600 to roughly 7,800. And I know that we had highs at 8,000, but those are kind of the windows resistance. So these would be the areas that I'm watching for chances to kind of leg myself back in, layer myself back in on the dollar index or the dollar pairs. The dollar yen, you notice it didn't include the dollar yen. And the reason why is the yen's been really weak as well. I think that technically speaking, the yen is very overbought on a lot of currency pairs. I am currently short Aussie yen. I'm short CAD yen. I'm short Swiss yen. And we were long on dollar yen since 105 to 109. That was a great trade. It's up towards 110.50, 111. But I just don't love how the dollar and yen behave because it's like they're both safe haven currency pairs. They can both be equally strong, equally weak. It's a very difficult one to trade. But I will say this: recently, the dollar's been stable and strong when the yen has just been consistently weaker. So now the yen has reached a point where it is very extreme. The trades I mentioned, I'm currently, Aussie yen looking for highs and tops to form. Now, I say tops loosely because, tops can be difficult to find. If it's been going up, 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 tops might be blow off. Tops might be, I don't think we're going to have a flash crash necessarily, but hey, it's that time of year where trends in April and May might push to those extremes. We might have a flash crash. I don't know. So don't discount that. That does happen. Since 2015, Tyson, we've essentially had a flash crash in Forex every year since 2015. And that's just in recent memory. I know we've had others out there, but, everyday non-farm payroll used to be a flash crash, 15 years ago. Now it's not. Aussie yen, CAD yen. Okay, same thing, looking for highs, tops to form. I have some great bar counts on my right trader strategy, looking for reversions and looking for trend balancing. The Swiss yen I like overall on the weekly chart for some bearishness. Pound yen is, I think, driving traders a little bit crazy. It stretches some highs, but again, looking for highs, tops, and then a more aggressive trend line. Trend lines to break. New Zealand yen did a pretty good job. We took some profit on that one. We were in a couple of trades. That was like almost 300 pips of profit. Dollar yen, I don't really want to fight that one. What am I missing? Swiss yen I like bearish, so I'm not.
I'm with you. I'm with you
Yeah,
on all.
yeah,
I'm the same exact, pretty much with you on all of the dollar pairs, all of the yen pairs.
yep,
I want to avoid. I'd add the New Zealand yen. I know that
yeah, yeah, yeah,
to that list. I think avoiding um, dollar yen, having a little bit of an avoidance of the Swiss yen, for me, I think
mm-hmm.
makes a lot of sense. Those are the ones that I'd want to focus on, and I'd wait for more confirmation on the yen pairs. I'd be a little bit more aggressive on the dollar pairs because I think they're coming up to nice levels like the Aussie dollar
Yep,
a little bit sooner. That
yep,
76, 77 level I think is really nice.
yep.
But yeah, I think we're speaking the same language and look for the same type of moves.
Yep, and also I'll throw it out there since we're just wrapping up here for Forex. I like dollar CAD long a lot. I love dollar CAD long a lot actually. I like the New Zealand CAD long. I like the Euro CAD long. I even like if Aussie CAD came down a little bit lower, I would say Aussie CAD as well. But these other ones, so certainly I'm gonna go ahead and take this one off. I love these three trades. Dollar CAD, I'll stay with it. We're on the chart right now. If it breaks the right side of the trend line or tests those lows, I'm still going to buy. I'm still going to hold. 1.30, that is my destination. Minimum. If we hit 1.30, a lot of profit. I'll add more to my winning trades. I'm waiting for more confirmation. New Zealand CAD sold off a lot. We've got some great, great pockets to trade back to. Euro CAD sold off aggressively, has some fantastic pockets to trade back to. I think those are good trades here in the next probably 1 to 2 weeks. So that's what I'm looking at Forex wise.
And I like when we're on the same page. And
Yeah.
we're on the
Typically,
same page with pretty much all the trades, which
yeah.
is which doesn't mean it's going to be great, but you know what? Over time, if we manage the trades well, there's no doubt in my mind we'll be able to manage these into problems.
Yep, I agree. All right, and I saw that crypto's been doing pretty well. I still have a lot of chart alarms that haven't been hit yet, but Ethereum blew off those recent highs, which is pretty exciting. Ethereum is the one. It's Bitcoin hasn't taken out the highs, Litecoin hasn't taken out the highs. Ripple was up to 75 cents today, which is awesome.
Wow,
I don't know
I
if
didn't
that.
see that.
Yeah, yeah, yeah.
Oh,
I was like, I set the chart alarm at 74 cents and it triggered this morning, so I'm like, okay, now that might be profit taking at Ripple and it sells back off to 30, 40 cents again, or maybe. I don't know, man. Maybe it's because like the SEC made it so nobody can trade it. So what does it do? It blows through 75 cents, maybe goes up to $1, $1.50, and so we'll be talking about how to take some profit on Bitcoin or on on Ripple at some point. But nevertheless, watch those cryptos, watch those highs. And I think that'll do it for today. We talked about a lot of stuff. If you're interested, like I said, in this session, I'll post in the notes. Equities on Demand. If you want to see a webinar with Tyson and I, where we talk about the entire sessions and strategies and courses, get an overview of it, I'll post a webinar link in the notes section or the description. If you want to join us, we're live every single day at 10 a.m. Eastern Time. So Monday through Friday, 10 a.m. Equities on Demand. Today, Tyson, we were live for about an hour and a half. Walk through, actually we walked through 5 awesome trades in addition to the 8 daily trades we had setting up. We just didn't have any of them activated because of our rules. But man, I mean, so much to talk about. But again, one step at a time. We're going to walk before run. We're bringing everybody in to the fray of Equities on Demand, and we're going to teach you everything you need to know from start to finish. So looking forward to that. Any final thoughts for today, Tyson?
Oh, I'm excited. This is the first day of what's the cliche? First day of the rest of your life. This is honestly the first day. Chris and I plan on doing this. There is no deadline or expiration for me. Plan on doing this for forever.
Yeah.
The only time that I'm going to be taking off is when I need a vacation. But every single day with you, Chris.
Mm-hmm.
The goal is to try to generate as much income that we can on a personal level, but also make it duplicatable for students.
Absolutely. Last thought, Final Four championship tonight. Congratulations to the Stanford women's team yesterday. I watched that. Pretty exciting game. It was amazing. I mean, look, Stanford, their average, their team was huge. They had like 6'1", 6'3", 6'5", and then Arizona was just fast and quick. It was a great game. Arizona had a chance to win it at the end. Tonight, Baylor Gonzaga, the chalkiest bracket known to man. I'm mad at myself because I had that bracket from my first entry, but I'm like, it can't be that chalky this year. It can't be 1 seeds. It is 1 seeds. Gonzaga versus Baylor. I hope it's a good game. I honestly think that I think a couple of players on the Gonzaga team are playing a little bit hurt. Again, it doesn't matter. It's like it's adrenaline. It's these guys are young, whatever. But it's going to be a great game. I hope it's a great game. But I've got Gonzaga in the bracket. That's how I win my bracket if I get Gonzaga to win tonight. So hopefully that's my little NC2A pool. But Baylor looks like a great team. They beat the snot out of Houston. They play like a pro team, man. They spread the court. It's a lot of fun.
That finish on that UCLA game was pretty amazing.
That was ridiculous. It was ridiculous.
Baylor. It was ridiculous. I couldn't believe it. I'm like, wow. But I have Gonzaga Baylor in the finals, and I have Baylor winning. So
all right. Let's find out. All right, traders. Thanks for being with us today. Hopefully, we'll see everybody this week in Equities on Demand. We'll see you next week for AAA and Ask an Analyst.